Hi, everyone. Welcome to YX Insights. This is Yimin. Today, we're focusing on the Magnificent Seven stocks, and we are pre-market open on March the 28th. So let's begin. The Mag 7 stocks, of course, sold off aggressively since mid-February. Tesla, the most, followed by NVDA, then Meta, and Google and Amazon. So, of course, Tesla almost dropped by 50% from its highs. It's slightly recovered from the recent lows. But even Meta and NVIDIA at their low points touched the bear market territory. Microsoft down just 4% from mid-February, but that disguised the fact that the stock basically moved sideways for more than a year. We are going to go through all of the stocks individually, looking at the valuation, the macro links, as well as the price technicals. So looking at Tesla, Tesla's PE is trading at 100x, which is obviously outrageously high compared to other stocks, but it has come down from its one-year high of, let's say, 150x, which is above the 2 standard deviation valuation. So actually now we're trading a bit more closely to its median valuation of the past year. So I have mentioned before that Tesla doesn't really trade on its fundamentals or the current valuation. So if you're looking at those numbers, the stock looks like a short all the way down to maybe 30x or so. And a lot of bears have made this mistake. But what Tesla is really trying to price in is the future value of the robotaxi market to the largest degree, and to a smaller extent, the Optimus humanoid robot market. And these are both trillion-dollar markets. Why does Tesla look more promising than other companies in these competitive fields? Essentially because Tesla has the manufacturing edge to mass produce, whether it's electric vehicles or humanoid robots. Yes, Waymo is already on the road, but they probably face higher production hurdles and costs than Tesla will do. Looking at the macro link, Tesla's sell-off actually is closely linked to the 10-year yield. So if you look at the timing of the 10-year yield sell-off, with each directional pivot, including its recent lows, the 10-year bottomed on March 3rd, and a week later, which is 5 trading days later, Tesla bottomed on the 10th of March in terms of closing price. I think it made an intraday low on the 11th, but roughly we're talking about a 5 to 6 day lag to the 10-year yield reaction. And that has produced an opportunity for us to kind of observe where the 10-year yield moves a week in advance to say where Tesla could move. So that is actually quite a strong advantage that Tesla investors have in thinking about where things are moving. So the 10-year yield a week ago fell about 10 basis points in this region here. And that coincides with Tesla retreating in the past couple of days. But since then, the 10-year yield has been on a tear. So if this relationship holds, Tesla should also move up, and we'll see in a second in what I think is wave 5 in the larger degree bottoming pattern. So just looking at the Tesla chart, I'm using the hourly chart here, so the pattern is a bit more obvious. We're using an Elliott wave theory where impulsive waves should have 5 waves. These are motive waves. What it means is that if Tesla can build 5 waves up from this low, it signals that this low is the bottom on March 11th, essentially. Why? Because that shows strong enough forward upward momentum from investor sentiment that the tide has turned. Comparing with just a 3-wave corrective upward move, where these two moves would be in equal length, and that's actually bearish rather than bullish, because it shows that investors don't really have strong enough sentiment pushing this stock forward. So once we see 5 waves up, we essentially know, okay, this bottom is in, and we can buy from the retrace. So let me just demonstrate how this works. So we're looking at, this is wave 1, and this is wave 2, and we're looking at this third wave. And the third wave actually traveled at a 1.764 extension of wave 1. So that's a very strong third wave. It shows bullish investor momentum from here. And I think wave 4 could have potentially bottomed here already. So typically, if it reaches 1.76 extension of wave 1, it would retrace down to this area typically. If the wave 4 does hold there, then I think we can get a nice wave 5 reaction into 300 plus region. And typically, wave 5 would be 1.382 to 1.618 extension, inverse extension of this wave 3 to wave 4. So what I expect right now is Tesla continue to push forward in the coming week and get up to 302 to 308, possibly even higher if the momentum is stronger. And what I would look for as an investor is that once these 5 waves are done, we confirm this is the bottom, we're looking for an ABC correction for an entry. And it will look like something like this. I'm kind of drawing freehand here, but typically speaking, let's say if we do end up at 308, for example, in the wave 5, the retrace is typically speaking 50% to 78% of this entire wave. So I think we could potentially get a nice entry below 260 or even below 250. So that's kind of how I'm thinking about Tesla right now. So we just patiently observe the final move of this pattern. I mean, someone has asked me, could this just be a B wave of wave 4? Yes, it can. So this could be a expanded flat. So A, B, C here to take wave 4 slightly lower, or a running flat. So then wave 4 ends up a bit higher. But more or less, we're talking about this region being the wave 4 and then wave 5 being the 302 to 308 area. So now let's move on to NVIDIA. So NVIDIA is trading now at, in terms of valuation, is 1 year low at just 25x. That's even below the 27x of the 2 standard deviation of the past 1 year. Again, it trades very closely to the 10-year bond yield. And I actually do think this is an opportunity for NVIDIA investors. Why? Because I think we're only midway through the AI cycle. We are mostly past the pre-training stage. We're doing really fancy large language models, image creation, etc. But we haven't seen real life applications like, you know, we had the iPhone and did basic functions, but the golden period was really the decade after the release of iPhone 3, when we had loads of different apps that people use to navigate their daily life. We have not got that for AI in this cycle yet. We have large language models, we have chatbots, but we haven't been able to automate a lot of our life using AI just yet. So I do think there's a huge road, a long road ahead, and inference cost in terms of demand for GPUs is 100 times of training. So NVIDIA being the leader in this space, 26 forward earning for 50% growth rate in the next 12 months is pretty good. Just looking at the macro lead, again, NVIDIA lags the 10-year yield by about 5 trading days. So very similar to Tesla, they bottom around the same date. And it's showing similar patterns to 10-year yield, but it has not been quite as bullish as Tesla in its technical patterns, and is actually a bit more volatile compared with Tesla right now. I think investors don't quite know how to price NVIDIA, and I think the bulls on the Tesla kind of agreed on what the sentiment drivers are, and the shorts the bears would agree about Tesla being really expensive, etc., in terms of valuation. But for NVIDIA, I think investors not as sure about how to think about this stock, whether how cyclical it is to the AI cycle, where the AI cycle is headed, and whether NVIDIA will show as much demand from its large customers going forward. So looking at NVIDIA's technical pattern, I think this is a wave 1 and this is a wave 2. We haven't really quite got the wave 3 yet, which is why it's not been as bullish as Tesla. But let's say wave 2 ends here, which it could do, because if you look at this as a wave A and this wave B, wave C here, wave C is basically around the 120% extension of wave A, which is where typically wave C ends. And we can start forward looking to map out where wave 3 might go. And typically wave 3 is the 138% extension of wave 1 here. And then I would expect some sort of retrace in the wave 4, and finally wave 5 taking us in the 140 region. It might seem quite far right now, and from the current level 110. But if you want to get in a trade now, if you're impatient, I would say having a stop here is a pretty good level, and just to wait for this trade to manifest. So there's a quite good risk reward, but for more prudent investors, they would benefit from all these 5 waves completing, also moving above this resistance zone from the January high, and then we buy the retrace from here. So now looking at Meta, its valuation is actually just around its median of 23x. It's growing at 20% every year, which is actually as fast as many of the growth stocks that growth investors like. And this valuation is not that challenging, to be honest. So I think Meta is a strong pick for fundamental investors going forward. And just looking at the price technicals for Meta, this is the hourly chart. I can get behind this being a wave 1 and wave 2, and potentially we got wave 3, which is at 1.38 extension of wave 1. But you can see that if this is wave 3 and this is wave 4, as I will show you in the chart, the question is, doesn't wave 4 overlap with wave 1? And the technical answer is, at the early stage of a pivot, a new direction, what we often get is a leading diagonal pattern, which means wave 1 and wave 4 can overlap. And this is a pattern that is often seen at the beginning or at the end of the rally, but not in wave 3. Why does this happen? Investors just fundamentally don't feel quite as bullish as you would in wave 3 about whether we did bottom here. So they're trying to get some short-term entries, push the stock forward, and then quickly bank gains once they reach a small profit. So their time horizon after a big sell-off has shrunk dramatically. So this is fundamentally to do with investor sentiment on where this stock might go in the short term. So the possibility is that we have this with 1 and 3 high over here connecting, and 1 with 2 and wave 4 here, and wave 5 could be somewhere in the 640 region. So upon completing these 5 waves, we can think about getting an entry on the ABC correction here. Of course, there are other possibilities. So I'm just showing one possibility where this is a leading diagonal where wave 1, 4 extend. But there's also a possibility that this is a nested wave 1, 2 and 1, 2. And actually this wave 3 is much further extended with 5 waves in between. So for example, 1, 2, 3, 4, 5 here to have a larger extended run. So it's really hard to tell right now at this early stage. but that's the bullish option that we're looking to monitor for now. Google is trading at 18 times PE, which is the lowest point of the past 1 year, also below its 2 standard deviation. Google actually has been a very volatile stock. As you can see, that the valuation has essentially bounced between the plus 2 standard deviation, minus 2 standard deviation, and back to plus 2 and minus 2. So that signals the investors don't really quite know how to price Google. Why? So Google obviously was one of the OGs in the AI development, but it fell behind after the launch of ChatGPT 3. And also, Google is facing regulatory pressure both at home in the US with DOJ probe, as well as in China, as China looks to retaliate US firms during the new trade war. So all of that regulatory risk, and as well as the AI development and the CapEx is spending, don't really make investors as comfortable as they should be for a company like Google. So it's actually trading at a pretty compelling valuation right now. So in the grand scheme of things, I'm quite bullish on Google, but in terms of price technicals, we haven't quite seen extremely bullish action yet. So just looking at this, we really have just got 2 waves here, wave 1 and wave 2. It's retraced about 60% of the this initial wave up. It can go all the way down to 78.6% pullback of this entire wave. That will end wave C at 160. So that's typically where wave 2 could trade. But assuming we've bottomed here, or they're about 160-ish level, then I'm thinking about the next 5, the upcoming wave 3 and 4 and 5 to be in the regions of wave 3 being around 180, which is 138% extension of wave 1. We get wave 4 pullback, and then wave 5, something like high 180s or even 190 over here. But obviously, the exact region for wave 5, we need to see how wave 3 trades first before we can decide, and as well as the size of wave 4 pullback. So I'm going to mark here as my target area for the next bullish move for Google. Of course, breaking below this wave C here, which is 156, would invalidate my thesis. And then for Amazon is also trading at a pretty low multiple right now compared to its 1 year performance. It dipped below the 2 standard deviation of its forward valuation at 30x, but it has since recovered a little bit, so it's moved above the lower bound of the past 1 year. So with Amazon's technicals, I wasn't quite sure whether we completed wave C, because it didn't quite reach the 100% extension of wave A, but it got pretty close. So more than 90% essentially. So this green line here is 90%. Given the broader market sentiment and the rebound, I think this suffices the technical pattern for now. We can never be quite textbook with everything in real life. And if that is actually the bottom, we're just looking at how Amazon could trade in terms of the 5 waves up. So we're looking at this pattern here being 1, 2, 3, 4, and then the 5th wave somewhere in this region here. And the 5th wave, let me just show you, is typically the 138 to 161 extension, inverse extension of wave 3 to wave 4. So that's in the 210 region. And of course, this wave 4 could have been ABC correction for wave 4. So wave 4 could overlap with wave 1, as I said in the leading diagonal pattern. But for now, we give Amazon the benefit of the doubt and have this 208 as a target. One thing I do want caution, though, is this wave 3 is only the 123% extension of wave 1. And that actually doesn't quite clear us in terms of the bearish potential of this being an ABC, because just remember that wave C is typically the 100 to 123 extension of wave A. So there is this bearish patterns that could be the alternative still. So of course, depending how this wave 4 correction plays out and whether that's actually not a wave 4, but actually another leg down for a new low, we can never be quite sure right now, which is why we need this fifth wave for confirmation of this bottom. Meanwhile, we just have to watch how the price action unfolds and what the market tells us. Apple is trading pretty much near its median and didn't suffer quite as much as the rest of the cohort from the beginning of the year. The market is seeing it as an AI carrier rather than an AI developer. It's not really growing very fast because of the headwinds in China. So on a fundamental level, I don't really like Apple as a stock, but it benefits from, first, the capital inflows of the US market. So being the largest company in the S&P 500, when there's investors buy the US index, they are automatically investing in Apple. And also Apple is benefiting from a huge cash pile that is just constantly buying back shares. I think we do have sufficient length in this as a wave 3. So I can see this being 1, 2, 3, potentially wave 4 here. This is a slightly shallow retrace of wave 4. And finally, we could end up at 227-ish level, or 226 about in wave 5. So once 5 waves complete, we can think about the retrace and for investor entry. And that would confirm this was actually indeed wave C here. Microsoft, a bit similar to Google, is trading at a -2 standard deviation of the past 1 year. It's actually gone well below the August low in terms of valuation. And the stock really hasn't gone anywhere for the past year. So if we look at Microsoft's performance, we're essentially where we were in January 2024, which is 15 months ago. And just as Microsoft did look like it was breaking and making a new all-time high, investors dumped it really relentlessly in the August sell-off. And actually, we didn't quite recover this high in the December rally either. What this looks like is a kind of very dragged ABC correction for wave 4. So unlike the Magnificent 7 peers, I don't think we're in wave 5 yet. And this wave C could travel, of course, beyond wave A first, but also the 123% extension of wave A. I'm just looking at this wave C pattern. What I've marked is the extension of wave 1 at the height of wave 2 high. And I can see this being wave 3 and wave 4, and then wave 5 sort of ending below 370-ish. Just looking at the micro degree pattern, I think wave 5 could be anywhere between the 138% extension or the 176 extension, this inverse of wave 3 and 4. So I've highlighted here as the potential destination of wave 5. I mean, you could argue that it did go through wave 3, so this could have ended wave 5. It would be a very short target in terms of length. But I'm not really that confident at this moment. So that's it for today. Thank you for joining me. If you've got any questions, please ping me on Slack or leave a comment. Thank you very much.